Okay, so today we're digging into something pretty wild. There's this brand new benchmark out there, and it's testing AI's ability to do something that, well, we thought was basically impossible: predict the future. And as you're about to see, the implications here could literally break the markets. For real. All right, let's get into it. You've probably heard this a million times, right? The big critique of AI is that it just memorizes and regurgitates. That these large language models are basically just super fancy parrots repeating patterns they've seen. The idea that they don't really understand anything, they just spit back what they've learned. Okay, but if that's really all they do, then how on earth do you explain this? How can these same parrots start predicting future world events? And I'm not just talking as well as humans. I mean, in some cases, better than entire markets packed with experts. That's the huge question we're going to unpack. So here's how we're going to break it all down. First, we'll talk about why prediction is basically a superpower. Then we'll dive into this new benchmark, Profit Arena, which is how we're even seeing this stuff. After that, we've got a killer case study. We'll get into the huge financial side of things, and then we'll look at what the real end game is here, because it's all about training even more powerful AI. All right, first up, why is predicting the future such a massive deal anyway? Well, to put it simply, knowing what's going to happen before it happens, that's a superpower, especially, and I mean especially, when money is involved. And look, this chart gives you a perfect real-world example. It's the famous, or infamous, Nancy Pelosi stock tracker. And just to be clear, this isn't about politics, it's purely a financial point. What it shows is that when you have some kind of advanced knowledge, some insight into which way things are going, your returns can absolutely demolish the market average. I mean, we're talking over 100% return compared to the S&P 500's 18%. It just proves a really simple truth. If you can predict better, you have a massive, massive financial edge. And this is where things start to get really wild. According to AI safety director Dan Hendricks, we are now seeing AI models, like right out of the box, demonstrating this exact superpower. They're starting to forecast world events and are matching, or in some cases even beating, the prediction markets run by humans. It's happening. So the obvious question is, how do we even know this? How is this being measured? Well, it's all thanks to a new tool, a live benchmark for this kind of intelligence, and it's called Profit Arena. Now, a lot of the older AI benchmarks were kinda easy to game. Profit Arena is totally different. It's a live test. The AIs get real-world questions, about everything you can imagine, from political elections to when Taylor Swift's next album might drop, and then they have to actually place bets with probabilities on platforms where there's real skin in the game. This isn't about just remembering facts. It's about live, real-time prediction. And here are the first results. Check out this leaderboard. It's ranked by statistical accuracy, and right up there at the top, you've got OpenAI's models, GPT-5, and O3 Mini, just dominating. But, and this is important, look who's right there in third. It's Google's Gemini 2.5 Pro. So this is not a one-horse race. What we're seeing is that these top-tier models are just consistently better at forecasting what's going to happen. So they measure success here in two main ways. First, there's what's called the Breyer score. That's what we just saw on the leaderboard. It's all about pure statistical accuracy. But then there's the second metric, which you could argue is even more important: average return. This one basically asks, okay, if you actually listened to the AI and placed bets based on its advice, how much money would you make? It turns that accuracy into cold, hard, simulated cash. Okay, I know this can all feel a little abstract, so let's make it real. Let's zoom right in on one specific case study that shows you exactly what it looks like when an AI flat out outsmarts the market. So the event in question was just a regular Major League Soccer match. The human betting market, all the people putting money down, they looked at the underdog, Toronto FC, and gave them what? An 11% chance of winning? Pathetic, right? But then one of OpenAI's models, O3 Mini, crunched the numbers and came back with something completely different. It said, nope, their chances are 30%. That is a massive disagreement. So what does an AI do when it spots something like that? It sees what's called a positive expected value. All that means is it saw an edge. It realized the market was totally mispricing the risk. The potential payoff for betting on the underdog was way, way bigger than the odds suggested. So it did the only logical thing. It bet against the crowd. And here's the kicker. Toronto FC won. They actually won the match. And that single bet, that confident move against the market, it turned a $1 investment into a $9 return. Just like that.
A huge win that proved the AI's analysis was just better than everyone else's.
Okay, so now imagine that, but not for one soccer game. Imagine that kind of predictive power being unleashed across every single financial market on the planet, all at once. Yeah, this is where the conversation shifts from a few bucks to billions of dollars.
The key word here is arbitrage. It's basically just finding and profiting from tiny little mistakes in the market's pricing, or in this case, its predictions. And sure, humans are okay at this, we can spot some of them, but an AI, it can do this at a scale and a speed that is just, it's completely superhuman. It can find every single tiny crack, every little instance where the market's collective guess is just a fraction of a percent off. And this is almost certain to set off a huge cycle of disruption. Here's how it'll probably play out. First, the early adopters, the people who jump on this first, they find that edge and make a ton of money, massive profits. But then, as more and more people start using these AI tools, the market adapts, it gets smarter, it corrects all those little mistakes until it becomes hyper-efficient. And then what? What's the end game? Well, it becomes a world where it's no longer humans versus humans. It's AIs fighting other AIs. And that means the window to actually make money off of this is right now. The people who figure out how to put this into practice first are looking at an opportunity that isn't just small change. We are talking about a full-on gold rush, potentially worth millions, maybe even billions of dollars. But that window won't stay open forever.
But look, as mind-blowing as the financial stuff is, it's kind of a distraction. The money is actually hiding the real endgame here, because this is about something so much bigger than just making a quick buck in the stock market.
And this right here is probably the most important part of this whole story. That $9 from the soccer bet, that's cool, but it's not the real prize. The real prize, the truly valuable thing, is the data that the AI generated while it was making the prediction. It's called the reasoning trace. Think of it like a log file of the AI's thoughts, the step-by-step process of how it arrived at that correct, market-beating answer.
And for an AI lab, this data is absolute gold. Why? Because it's the perfect fuel for what they call reinforcement learning. It's actually pretty simple. When the model gets a prediction right, you can look at its reasoning trace and basically tell it, good job, think more like that. And when it gets one wrong, you can tell it, nope, that was bad logic, don't do that again. It creates this incredibly powerful feedback loop for building smarter and smarter AI. And it's no accident that you see OpenAI hiring for jobs with titles like Research Engineer Focused Bets. This is their strategy.
You know, this really signals a huge shift, a totally new paradigm. We've had specialized trading algorithms for decades, right? These super focused quant models. But this is not that. These are general reasoning models. We're talking about the same AIs you can ask to write a poem or explain a historical event. And now they're being taught how to master prediction.
So all of this leads to one last really big question. This tech is quickly moving way beyond just making money. It's about building systems that can literally, systematically, reduce our uncertainty about what's coming next. So I guess I'll just leave you with this thought. What happens to our world, to our economy, to just how we live, when the future is no longer a surprise?